December 23rd. Kind of go over what we saw overnight hours using the boom levels, some of our setups that we saw coming into the New York Open. And I'm going to make it pretty brief today. It's holidays. I know everyone's going to enjoy their families. And Merry Christmas to everybody. And thank you for being a part of our community. And if you're not part of our community, come join us. We're doing some fantastic things. We're going to help everyone be profitable in 2025. So to start with, we go to the overnight hours. We see the Asia Open down here. And ironically, it opened right off of one of our boom level extensions here. Overnight hours, they ran Asia up to our median level or our equilibrium level of our range. And then after the midnight open, they could not hold that. So they brought it right back down. So you can see how these levels hold. I mean, these levels are your key to just about anything in this system, including if you're scalping. If you scalp in the direction that you're trying to go based on these levels, you are going to be set. So we'll get more into the entries in just a few minutes here. But at any rate, overnight hours, London, they decided to sell it down very close to our extension level. Brought it back up in the early morning, 6:30 a.m., brought it back up a little bit. This is our 9:30 a.m. open here with this big giant dot. And of course, Nasdaq was chopping around here a little bit, as evidenced by this 15-minute candle here. They went down low, came back up, tried to take them high, and some people got caught in there. It was a little choppy this morning. It was a little tougher to trade. But so what happened? So they decided to sell it down, came down here and took out a liquidity level. This was a pretty big level down here also in terms of liquidity. It was a past session liquidity down there. But key to mention and notice down here is we had a failure to close on this 15-minute candle. The failure to close tells us a whole lot because we know, having the boom levels, we know we have ranges higher. And these were our ranges for the day. We had 812 on the board. We had 895 we were hoping to get to. But we could expect at least, if they're coming back into the range, that we're going to go at least back to our equilibrium level here, which they did very, very nicely, actually a couple of times. So if we're going to use Strat in this instance, we can see we had a 2 down, followed by a 1 bar, followed by a 2 up. So that is a 2, 1, 2 reversal. Okay. The very next bar came back in again, another 1 bar. So a little more consolidation there. And then it became another 2, 1, 2. So where were we taking this up? Right here on Strat in 15-minute. Right here, the top of this bar. Oops. The top of that bar was a 15-minute entry. And as long as we did not go below this, we were good to start pursuing the pivots higher. There's 1, 2, 3, and some more back here. So that 15-minute Strat entry got you in very, very nicely, very nice and early on a 15-minute time frame. There were other entries that were much lower that we'll go down and see here in a few minutes. But then from the entry, we see 2 up. Did this 2 take us out? No. 2 up again. Did this one take us out? No. 2 up, 2 up. Then we had another 2 up, which is kind of a retrace. And we finally had a 2 down. This one would have took you out, wouldn't have taken you out of your position, but was a significant pullback. Followed by another 2 up, a 2 up, and then an aggressive 3 bar to come right up into our levels up here. And then we saw a slight pullback and then another hit into the close there. So let's go ahead and look at some of the lower time frame entries that we saw this morning coming into the day. I hope you guys are starting to see how the Strat on higher time frames, even lower time frames, can work very, very well for you. Now remember, this was the 15-minute time frame, right? That was a 15-minute candle that we decided to take up. That was our entry, which would have kept you out of all this. which was a little bit of a what I call a choposaurus in here, and it was a little choppy, but there was still, you know, a couple of good entries in here that we could have taken. This V-shaped recovery right here, you know, on the 15-minute time frame, this was the wick that was put in. This sharp V-shaped recovery, that was the wick. Okay, so what do we see here? We see them come off a higher time frame liquidity level, come right up, and then they go into an accumulation. This is very, very typical. Very typical. Everyone's going to get in, get their positions filled so that they can go long and sell it out higher. The old let's make money on the retails type of thing. So we have a 3-bar here, served as a good entry. There's 1 entry. There's 2, 3 entries. And, you know, you could have even followed that all the way across for additional entries. But we did see here also another 3-bar entry on the way up. Okay, and that was in the 1-minute time frame. What I want to point out to you guys, though, is that, you know, the 1-minute time frame is fantastic. But if you come down even to lower time frames, you're going to get better entries, lower risk, which is probably the bigger deal in this whole thing. That's why we really like the lower entries. I mean, lower time frame entries is because the risk is so much less. So as an example, we go down to, this is the 15-second time frame now. And now we're starting to see that we had the same entries. You know, our 3-bar is 2 things. It's a broadening formation, but it also shows us and tells us who the aggressors are at that point of the game. And when we see these aggressors hitting this once, twice, 3 times, 4 times, we're seeing very strong buyers in here, down here. So we had a 3-bar entry here, 15-second. There was a second possible entry here. There was a third entry and a 4th entry. You want to keep going across. This level proved to be strong. We had a 3-bar that took them up, brought them back down. This is the origin of a move from here to there. So we also saw them bring it all the way back in, building liquidity in the process, and then run it up again from there. So when you're on your lower time frame charts, you want to mark out where the highs of those additional 15-minute bars are. Because, or you can even have it on another chart, use some multi-time frame analysis to be able to see when 15-second, for example, takes that 15 up. So now you know we have a higher time frame participants are now in force in buying. So once they're buying, hey, we want to ride along with those guys. We don't want to just rely on structure. Structure is helpful, but it's not everything. Okay, structure combined with who's buying when, time frame continuity is huge. So as we see here, they just kept buying this thing up all morning. And I think we went down to 5 seconds. We had some more, some more 3-bars in here that were some more entries. I'm not going to go through all those right now, but the important thing to note here is that once this 15 went up, you never had to get out until we were way up here. You know, we had a positive run on that thing from that entry that delivered almost 178 points before you even had to think about getting. In fact, you never had to think about getting out because it never took you out. This was your level to get out. Basically, where you got in on that 15 up was your level to get out. And so anyone taking this long, all they had to do is follow structure all the way up, and you would have got paid. Now, how do we know where it's going? Well, we have some very high probability levels that a lot of people don't have access to. And that is a definite edge. We know that if we hold this level on the extension of the range, we know that our next level, our next more likely level, is going to be up here. So no matter what's over here, we know this is our next likely level. And today it proved again to be a very successful trade, even just playing level to level. So you guys can leverage these levels and make a ton of money on them. We still look for our double tops and our double bottoms using structure. And here was a good example. Down here was a good example. There's a lot of good trades today, even though it was a 1 day, an inside day, always considered to be a little choppy as price discovery is happening inside of this range. We know what to expect. We're going to expect very little follow through, and we're going to expect some choppy conditions. Is that tradable? Most definitely it's tradable. But you have a little different style of trading to do. You don't want to try and hold for long moves. Maybe just hold to your levels, level to level, or taking out highs and getting back in, or using it as some type of scalp if you want. Anyway, that's probably going to do it for me today on this 23rd of December. We got a lot of stuff coming in 2025, and I think people are going to be very, very happy. We have an indicator in development that is almost complete, and we're going to be unleashing all that stuff in the community, and we are really going to take this learning up to the next level. So anyone that has questions on the strat, on structure, on how we are entering these things, and how we're using the boom levels, most importantly, because as you can tell, these things are powerful, guys. We had a trade here, one level to the next level. This could be another considered trade. From this level here to this level. I mean, that alone, you're looking at just trading level to level on these. 164 both ways. I mean, that's, what's that, 320 points? I mean, that's more than enough to make a really, really good living. And that is simply by using our boom levels that we are providing to you guys every day on a lot of different assets. So NQES, all of those, CLGC, no matter what it is, we got some really, really powerful levels for you to use. All right, guys, Merry Christmas to everybody. We don't speak to you. Tell your friends about us, because we're going to be doing some great stuff coming up here, and they're not going to want to miss this.